Imagine this. You want to buy a car, rent an apartment, or maybe just get approved for a simple credit card. You apply, you wait, and then, boom, denied. Not because you did something wrong, but because you don't have enough credit history. It feels unfair, right? That's the exact problem credit building loans claim to solve. But here's the big question. Do they actually work? Stick with me, because by the end of this video, you'll know exactly how these loans work, whether they can really help your credit, and the mistakes you absolutely must avoid if you want results. Number 1. What is a credit building loan really? Think of a credit building loan like training wheels for your credit score. Unlike a normal loan where the bank gives you money up front, with a credit builder loan, the bank or credit union locks the money in a savings account or certificate of deposit. You make monthly payments, usually between $20 and $50, over a set time, like 12 or 24 months. Only after you finish paying, you get access to that money. So, it's like saving money, but in a way that also reports to the credit bureaus. For example, let's say you sign up for a 24-month loan for $600. You pay $25 each month. At the end of 2 years, the bank unlocks your $600, minus maybe some fees or interest. Meanwhile, your on-time payments were reported to Equifax, Experian, and TransUnion. That reporting builds your credit history. Number 2. Why do people need credit building loans? Here's the thing. You can't get credit without already having credit. It's like trying to get your first job without any work experience. Lenders want proof that you can handle debt. Without history, they say sorry, not enough information. Credit builder loans step in as that proof. By showing 12 or 24 months of on-time payments, you create a track record. And this can make the difference between being denied for a car loan and driving off the lot with keys in your hand. A real example. Imagine Maria, a 22-year-old with no credit. She takes out a 12-month credit builder loan for $300. At the end of the year, she has that money back, plus a credit score high enough to qualify for her first credit card. That's the power of using one smart step to open doors. Number 3. How do they actually affect your credit score? Your credit score is like a recipe. The biggest ingredient is payment history, about 35% of your score. Every on-time payment on a credit builder loan is like adding fresh ingredients to your recipe. Second, you add credit mix, which is about 10% of your score. Lenders want to see you can handle different types of credit. A credit builder loan adds an installment loan to your file, balancing out credit cards if you already have one. So, if you make all your payments on time, you could see your score rise in just a few months. Some studies show people gaining 60 points or more over the life of the loan. That's the difference between bad credit and fair credit, or fair credit and good credit. Number 4. The hidden costs nobody talks about. Now here's the catch. These loans aren't free. Banks usually charge interest, sometimes 5%, 10%, even 15%. That means you'll get back less money than you put in. Example. If you borrow $500 with a 10% interest rate over 12 months, you might only get back around $475. The rest went to interest. Is it worth paying $25 just to build credit? For some people, yes. Because a higher credit score can save you hundreds or even thousands of dollars later on interest for a car loan or mortgage. But if you already have other ways to build credit, paying interest might feel like throwing money away. Number 5. Who should actually use a credit builder loan? These loans work best for beginners with zero credit history or for people rebuilding after a setback. If you've never had a credit card, or if your past credit mistakes mean banks don't trust you yet, this tool is designed for you. For example, imagine John. He had a medical bill go to collections 2 years ago. His score dropped to the low 500s. Now, he's using a credit builder loan to show lenders he's serious about paying on time. It won't erase his past mistake, but it helps create a positive new history. On the other hand, if you already have multiple credit cards and a car loan, a credit builder loan might not move the needle much. Your score is already based on more complex data. Number 6. Alternatives you might not know about. Credit builder loans aren't the only option. One alternative is a secured credit card. You put down a deposit, say $200, and that deposit becomes your credit limit. Use it responsibly, pay on time, and it reports just like a regular card. Another option is becoming an authorized user on someone else's credit card. If a parent or trusted friend has a card with good history, their positive payments can show up on your report. And don't forget rent reporting services. Some companies let you add your monthly rent payments to your credit file. If you pay $900 every month on time, why shouldn't that help your score? Number 7. The biggest mistakes to avoid. Credit builder loans sound simple, but people still mess them up. The number one mistake? Missing a payment. Remember, the whole point is building a history of on-time payments. If you miss even one, it can hurt your score instead of helping. Second mistake? Taking on a loan you can't really afford. Don't sign up for $50 a month if you can only handle $20. You'll just stress yourself and risk default. Third mistake? Expecting overnight results. A credit builder loan is not a quick fix. It takes months, sometimes a full year, to see real improvements. If you expect your score to jump 100 points in 30 days, you'll be disappointed. Number 8. Do credit builder loans actually work? Here's the truth. Yes, they work. But only if you use them correctly. They are not magic. They won't erase collections, bankruptcies, or late payments. They also won't instantly give you a 750 score. But if you're starting from scratch, they can give you the foundation you need. Like a gym membership for your credit score. Buying the membership doesn't make you fit. Using it consistently does. In fact, studies from the Consumer Financial Protection Bureau found that people with no existing debt benefited the most. Their scores went up, and they were more likely to open new accounts afterward. Number 9. How to decide if it's right for you. Ask yourself these questions. Do you have no credit history at all? Have you been denied for credit cards because of thin credit? Are you patient enough to stick with payments for a year or two? If yes, then a credit builder loan could be a smart move. If not, you might be better off with alternatives like a secured card or rent reporting. Here's an example decision. Lisa is 19, has never had credit, and wants to get a car in 2 years. A credit builder loan now could put her in position to get approved with a much lower interest rate when she's ready. That's thousands of dollars saved on the car loan. Number 10. Final thoughts that might surprise you. Here's the surprising part. Building credit is less about the tool you use and more about your habits. Whether it's a loan, a card, or rent reporting, the secret is consistency. Pay on time every time. Keep balances low. Avoid too many new accounts at once. Credit builder loans are just one pathway. They give structure and force discipline because you're locked into payments. That's why they can work so well for beginners. But the ultimate takeaway is this. The loan itself doesn't build your credit. You do. The loan just gives you the stage to perform on. Number 11. Where can you get a credit builder loan? Credit builder loans are usually offered by community banks, local credit unions, or online financial companies. You won't usually find them at big national banks because they don't focus on beginner credit products. Credit unions are often the best place to start since they are nonprofit and designed to help people in the community. For example, many credit unions offer loans as small as $300 with flexible payment options. Some online companies, like Self or MoneyLion, even let you apply through an app without ever walking into a branch. Number 12. How long should you keep a credit builder loan? Most credit builder loans run between 6 months and 24 months. Shorter loans, like 6 or 12 months, give you results faster but may not show as much long-term consistency. Longer loans, like 24 months, give you a stronger track record because lenders see 2 full years of on-time payments. A good rule of thumb is to pick a length you can commit to comfortably without missing a single payment. Number 13. What happens if you pay it off early? It might seem smart to pay off a loan early, but with credit builder loans, that can backfire. Paying early means you shorten the payment history being reported, and that reduces the positive impact on your score. Remember, lenders want to see steady payments over time. So while paying off a car loan early might save money, with credit builder loans, finishing too soon can actually limit the benefits. Number 14. How much can your score really go up? There's no single answer, but many people see improvements anywhere from 20 points to over 100 points over the life of the loan. It depends on where you're starting. If you have zero history, the gains can be bigger because every payment is brand new data. If you already have some history, the boost may be smaller but still valuable. For example, going from a 540 score to a 620 can mean thousands saved on a car loan or being approved for a credit card you couldn't get before. Number 15. Do credit builder loans help with bad credit or only no credit? They work for both, but the results are different. For someone with no credit, the loan builds the very first foundation. For someone with bad credit, like past late payments or collections, it won't erase the negatives, but it can help offset them with new positive activity. Think of it like planting fresh flowers in a garden that has weeds. The weeds are still there, but the flowers make the garden look better overall. Number 16. What happens after the loan ends? When you finish, you get your money back, and you also have a loan account showing as paid as agreed on your credit report. That closed account stays on your report for up to 10 years, continuing to help your history. At this point, many people take the money they just got back and use it to open a secured credit card or start an emergency fund. It's like graduating from credit training wheels and moving to a real bike. So, do credit building loans actually work? Yes, but they work only if you play by the rules. They are not for everyone, but for the right person, they can be the ticket from credit invisible to credit ready. Now I want to hear from you. If you were starting from zero, would you choose a credit builder loan, or would you go with something like a secured card instead?